Hello and welcome to the Weekend Investing Daily Bite of December the 4th. A good day again. The markets have surprised a lot of folks, brushing aside a lot of negative news, and is now consolidating at the current levels. I think the markets is at that cusp of a huge rally. Of course, we are awaiting the outcome of the rate cut decision later in this week, and that should be the trigger that should take the market forward. Today's story is about a shocking IPO scandal that has been exposed by SEBI. So I think our regulator is doing a fair job in terms of policing the system and trying to protect investors. Of course, at times we may feel that they are overdoing that, but in this case, I think hats off to them for pulling off this particular IPO down. We'll talk more about this in the second half of the video. If you haven't so far, please go ahead and get a health check done for your portfolio. You can use the portfolio momentum report on the weekend investing site, or you can use the QR code to get there. And once you put in your investments into that form, you will get a report telling you about the momentum score and the weightage skew of your portfolio. So it will give you a very nice health checkup from a momentum perspective of your portfolio, and you can make changes going forward. Also, MIMT All Cap, our very popular strategy, is celebrating its 6th anniversary. You can use the code All Cap 6 to get into this strategy if you like. Please do read the disclaimer and do subscribe to the channel if you haven't so far. Click on the bell notification. Where is the market headed? The market has surprised most folks in the last many days. We had some great, negative news on the horizon, whether it was GDP slowdown, whether it was additional taxation that is coming through, whether it was, uh, just auto sales that has not really picked up as well. FMCG sales are really poor. So a lot of news based basis which we could have latched on and gone down, but we are still standing quite reasonably strong, I would say. We are now at the cusp of the next leg up, which I think will happen once the rate decisions are out. Nifty is still a bit far from where it had reached earlier in September, about couple of thousand points away, but the rest of the market is beginning to get even closer. So Nifty today was flat, 0.04%. It gave up the morning gains and closed right at 24467. Nifty Next 50 continues to rally hard. So this is the 8th session post this gap that Nifty Next 50 has gone up and is looking good at 72,200, up nearly 0.5%. Nifty mid cap is even stronger. It is now beating this pivot right here. Gap up today again and 0.9% up. And Nifty small caps also up for 8th session post this gap at 18,143. So this is now looking like a runaway train, although the narrative around is still reasonably negative. So uh, you can either say that the prices are moving ahead and the narrative will come around to it, or maybe this is flash in the pan, and one of these days we'll get a slap back in terms of bulls getting hammered again. It doesn't look like that as of now, and it does look like that the rally is very much on reasonably strong footing. Small caps up 0.76%. Bank Nifty has kind of broken out of this range of 52,500 to 51,000 and is looking up. Bank Nifty up 1.08%. Usually, when Bank Nifty will make a decisive move, the markets will follow. So always look for stronger moves in Bank Nifty for leading the market up or down. Advance decline ratio was more biased towards advances, 292 to 204. So it looks good so far in terms of advance decline ratio. Nifty 50, however, was skewed towards the red. If you see the number of stocks in red, HDFC Bank was the sort of the lone uh, stock out there which really was supporting the Nifty upwards. Reliance was down, Maruti was down, Tata Motors down, Hindustan Lever, ITC, Bharti, all were down. But TCS, HDFC Bank, uh, and HDFC Life as well. These were some of the stocks pushing the Nifty up. In the Nifty Next 50, you see a lot more green. So you have PFC, IRFC, Chola Finance, Lodha again doing very well, ABB doing well, Gas Authority, Zomato, Pidilite. Some of the familiar names that have been doing well continue to do well. And Nifty Next 50 was looking reasonably green in today's session. PSU banks for day number two, leading the pack. So in 2 days, almost 4.5% gains. For the last 1 week, 5.2%. For the last 1 month, 5.5%. So entire losses for the last month and 3 months has been wiped out on PSU banks. Real estate running strong. So in this last 1 month, real estate is now the top performing sector at plus 10%. And for 3 months also, it is in the top contenders. For the 1 year gone by, also real estate is the top contender. So real estate is telling you that the underlying thesis here is very, very strong. Bank Nifty also recovering along with private banks, and rest were quite muted. Energy and FMCG auto were losing some ground. FMCG, as I've been mentioning many times, along with energy, are the sort of the higher risk factors right now in the market, not performing at all. In the last 3 months, energy is down 12.8%, FMCG is down 10.2%, and autos are also down 9.1%, along with public sector enterprise stocks, which are also down 9.6. So these are 3 or 4 sectors that have become very, very sluggish. And this needs some sort of a push. Maybe the interest rate cut is that push, which may trigger autos and maybe even FMCG stocks going forward. PSU banks, second day running, doing well, 2.2%. And you can see post this banking amendment regulation that has been passed in the parliament, UCO Bank, IOB, Punjab Sindh Bank, Central Bank, all of these smaller banks have really taken off. The finance minister is also congratulating and commending these banks for their renewed health and the strength in that sector. And that also possibly is causing more money to flow into those banks. Uh, in the stock spotlight section, you have HEG. So second day running, HEG up 16.2%. So graphite and HEG, the two stocks have shot up suddenly, and this is on the back of China saying that we will not export to the US some of the heavy metals or any specific items that they are trying. So there is a war of words going on right now before Trump comes in. Trump says, I'll put tariffs. China says, we will not export these items to you at all, which are needed in the EV industry, etc. So there is going to be some negotiation at some point of time. China is also pressing on in terms of lowering or devaluing their currency versus the USD, which USD also wants to do versus China. So let's see where this goes, but the beneficiary is HEG as for today. Now let's come to the story of the day. IPO scandal gone exposed by SEBI, IPO gone wrong. So Traffic ITS Technologies is that IPO. It specializes in intelligent transportation systems. On paper, at least, proposed IPO size was nearly 45 crores, price band of 66 to 70 rupees, and it was oversubscribed 345 times. So I don't know, what is the selling tactic by these merchant bankers or by whoever is marketing these IPOs, but 345 times so oversubscription is quite meaningful. The timeline was at May end, they filed the DRHP, the red herring prospectus. September was the IPO subscription period. Then September 17th, immediately after the IPO was subscribed to by people, it was halted by SEBI and BSE. In October, SEBI came out with an interim order, and final order was issued yesterday by SEBI. The IPO was for purchase of software, working capital, debt repayment, etc., etc. So it looked normal from the outside, but the catalyst was a whistleblower, and a small investors welfare association is there by the acronym Siren, and they approached SEBI and made a complaint. And when SEBI investigated, they found that the vendor's office was locked. So there was no operation there where supposedly the IPO, the office was to be there, the company's office was to be there. So there was no operational office. All the audited and verified financial statements that were presented in the DRHP were found to be fabricated. Uh, There were no real clients. All the pipelines that they claimed is the new orders that they are going to get were found to be false, and there was no proven expertise. It was a shell entity. So just see how easily people are able to make a fool of investors, and not just a few investors who came in at 345 times the IPO uh, requirement. So if you go back and see, so this IPO size was 45 crores. So 345 times was the subscription. So just see what kind of money, running into several thousand crores was going to be bet on this company, where it was a shell and it was fabricated, forged, etc., so on and so forth. So essentially showing that nobody really bothers about where they are putting in their money. It is very easy to sort of mislead people into buying or selling something just by making some tall claims. uh, very few people actually read the DRHP. Very few people actually do any background check. Most people will just go with gray market premiums and just bet on a stock or an IPO to flip it on day one. And then immediately SEBI said that we are canceling this IPO. I don't know if this has been done in the past, but I don't recall in the last 20-30 years this happening, that once money has come in and everything has been vetted, IPO getting cancelled at that stage. Um, of course, there is significant amount of, I think, uh, due diligence at the regulators end also, which was possibly missing, or at the exchanges end, which was missing, where in SME IPOs are vetted at the exchange end as well, and the merchant bankers also play a role. So it seems like everybody was hand in glove in terms of getting this through. So the refund has been ordered, people will get their money back, so on and so forth. So there is no loss to anybody. And it will set a precedent for IPO oversight, and more tighter norms will now come in for newer IPOs and so on and so forth. So in the last year or so, we've had several SME IPOs come through, and they've been subscribed not 300 times, but even 500 times, 700 times, 2000 times. And a lot of times it is just blind betting, just like you buy a lottery ticket. And that kind of a greed often ends in some kind of a disaster at some point of time. This time it has been saved. I think a lot of investors money got saved. They should be thanking the regulator and that investor group which highlighted the issue and the whistleblower. And essentially, don't my sense is that don't play this flipping game. The You will, first of all, you will not get any significant allocation. And even if you get some allocation, that allocation is usually not meaningful in your overall scheme of things. If you have, let's say, 10 lakh rupees and you got a allocation of 20,000, then even if it doubles or triples, it really does not impact your overall wealth in any big way. And then of course the risk factor is there. What is the risk versus reward? So are you risking too much for a reward that may not be commensurate, so on and so forth. So these are some of the thoughts that one should have for SME as well as regular board IPOs. Our thesis on this is that you should allow a stock to list, let it stabilize, and then take a long term view if you have to. I mean, nothing is really running away, in a sense that I have not seen any IPO. Maybe one in 100 may do that, but most of the IPOs will not be a runaway train on listing. In fact, most of them will see within the first 6 months some sort of a cool off that happens. Once that has cooled off, then you take a call basis whatever study you are doing, or basis momentum, whichever way you look like, and then take a call on that IPO and make money in the longer term. That is probably the more surer way of making money from IPOs. Let me know how you like this content. Thank you so much for watching, and I'll see you in the next one. Bye bye.